It's been said that 2 points make a line and 3 points make a trend. So let's go. With CPI coming in hot once again, making it 3 in a row, PPI and meats, tack on an overextended market with geopolitical concerns over Iran attacking Israel, and you have one painful week last week. One thing for sure is that I sure am glad that I messaged the Discord that I was closing all my open trades. When geopolitical concerns become reality like they did this weekend, then the initial sell-off can sometimes be brutal, but also a buying opportunity, as many times the market can get overextended to the downside. I'm sure many people are wondering where this pullback may end, and we'll take a look in a bit. But first, if we take a quick look at the S&P stocks trading this past week, we see green. Very little green, and really not more than a handful of them across all 500 stocks. Apple, Google, Tesla, Nike, Costco, and that new GE spinoff, GEV, they were about it. Pretty much nothing did well last week, and this shows you that corrective waves are tricky to trade, and sometimes the best trade is no trade at all. And when we flip over to the percentage of S&P 500 stocks trading above their 20-day simple moving average, we see that we sold off in a big way, as less than 15% of the stocks are trading above their 50-day moving average, but the odds-on favorite is this can go into the single digits before reversing. And the percentage of S&P 500 stocks trading above their 50-day moving average saw pain, but this guy will likely want to move lower before the pullback / correction ends. Looking at SPY on the weekly, we see that we finally closed below that elusive 5 EMA, and the MACD has been showing that momentum is waning, and we're likely to see this MACD line cross below the signal if this pullback continues. Now, spiking below this 13 EMA this week would be normal market behavior, which I'm thinking would likely coincide with the psychological area of 500. Now, this 5-wave structure will likely put a wave or first wave down, followed by a B wave that comes back up, followed by a C wave or a wave 3 that likely comes down. Now, if this is a 5-wave, we'd put up a 4th wave before going lower into a 5th wave, but more on that in a bit. If we zoom in here and throw in our fib retracements, we see that we're likely to come back down into this 500 area, spiking through this 13 exponential moving average. And I'm thinking likely then we bounce into the first week of major tech earnings. And this also aligns with the PCE print. And let's face it, when it comes to the PCE print, PPI was okay, and CPI for the most part was on the edge. Let me explain. CPI month over month was actually 0.36%, which rounded up to 0.4%. Now just think, if we would have been 2 100ths less, or 0.34%, then we would have rounded down to 0.3%, and SPY was likely moving higher on that. Now remember, 38% retrace is super bearish if we go ahead and then go to the downside. 50% is kind of what we normally expect before continuing the pullback or correction, and it's super bullish if we can get into that golden pocket before moving lower, as usually this corrective wave will then go ahead and start to move and regain its bullish momentum once again. This means in a couple weeks, I'm expecting we're going to retrace to, let's call it the 515 area. Now again, I would be expecting more downside going into next week before we spike through this 13 EMA into that 500 psychological area, but then likely springing back up, and I would be wanting to get into trade signals by the end of this week, riding the relief rally. Now, if we flip over to the Qs, we see for 9 weeks now, we've pretty much gone nowhere as we've been stuck in a range. So the question on every trader's mind is, has this been a correction through time and we're likely to move higher? Or has this been distribution and we're likely to start moving lower? Now, we also see that over the last several weeks that the NASDAQ or the Qs have been building this pennant, which typically is bullish type behavior. But if this energy gets released into the southern direction, any power it would have gone in the northern direction, it will go ahead and release in the southern direction. After watching the banks post epic earnings, we saw a sell the news event with a ton of selling. This doesn't exactly give me a warm and fuzzy when it comes to tech, but for reasons I mentioned earlier, we typically don't move in straight lines. Looking at the Russell, the IWM definitely took the brunt of the CPI print, as now you'll notice that we drop back into the trading range that we've been in over the last couple years. Even though the MACD didn't cross its signal, this one appears as though momentum is waning as well. So unless we can break this range, I'm not exactly going to go ahead and buy into TNA, the triple leveraged ETF, anytime soon. US 10Y yield saw a follow through last week, and this is never good for equities. And the VIX saw a follow through as well, coming close to getting up to 20, but went ahead and still closed up 15% on the week. Now 18 is the danger area, and once we get above 20, swing trading gets a little bit more difficult. And I'm expecting on Monday, we're gonna likely be in this area. Earnings have more banks on tap for next week. Now this week, there's not a lot on the economic calendar, but we do have Jerome Powell speaking on Tuesday, and the PCE print will be in a couple weeks. If you wanna see how I predicted this year is turning out, and I've been pretty much right on par, then go ahead and watch this video right here, as that's all I have for now until the next video, and we'll see you then.